Buffett dumped his banking shares sometime this year.
Yeah, he did.
When I talk to the old guys in my generation, they go, what does that mean? I said, it means it's just starting. And, what happens is the Fed and the Treasury went into the, what I call the repo market. At that point, the whole banking system was coming apart anyway. And so meanwhile, you guys are picking up speed and you're replacing banks. So when you say you created a place for cryptocurrency, it's almost like a securitized or a what I would call a fractional reserve type of process of traditional banking. So, somebody with a lot of Bitcoin, they're gaining no interest off of it. But just like in the real world, the people with $1 million cash, they're now charging them negative interest rates. So it's now costing a guy with $1 million in cash to store their money in the bank. So let's say they got $1 million and it's minus 5% interest. They're charging them, $50,000 to store their cash. And that's why Dalio just said, of Bridgewater, just said cash is trash. I like to brag that I've been saying that for years, cash is trash. And that's why I was early into gold and silver, and now it's Bitcoin.
Yeah, let's say I have a lot of Bitcoin and I'm just holding it. What would I do with you?
Let's even start with saying you don't have any Bitcoin yet because you're still learning about it. What you could do with BlockFi is you could, either using our website or our mobile app, create an account. You could connect to your bank account and ACH dollars onto our platform. The minute that those dollars hit our platform, you're earning an 8.6% annual yield on them that's paid out every month. So we're not charging you to hold dollars on our platform. We're actually holding them as stable coins, and you're earning a very attractive interest rate on them.
If I give you $100, you're going to pay me $8 per year?
$8. You'll have $100 at the end of the year. 1 year after you deposit $100, you'll have $108.60 on our platform.
So I put $100 cash, and then you turn that into Bitcoin or crypto?
We turn it into what's called a stable coin, which is basically a digital representation that's backed by a dollar in a bank account, but it's a dollar token. And that's what you're earning 8.6% interest on. Now, at any point along the way, you can take the $100 out of stablecoin and send it right back to your bank account, including with whatever interest that you've earned. Then you can also use those dollars to buy either Bitcoin or a tokenized version of gold, which is also available on our platform. Once you purchase those things, you start earning interest in that asset. So right now, if you're holding Bitcoin on our platform, you earn a 6% annual yield on your Bitcoin paid in Bitcoin. And you could just take Bitcoin that you already have and send it directly into your BlockFi account. You don't have to fund the account with dollars. You can also fund the account initially with Bitcoin if you already have some, but it's so simple.
So how do you guys generate that return?
Yeah, so our system is fully reserved. We don't have the unique ability that traditional banks have that are connected to the government to create new monetary supply in the form of loans. So any loan that we make on our platform is coming from dollars that already exist or Bitcoin that already exists on our platform. The reason we're able to generate the high yields is that we are doing lending in the crypto sector. There's a couple different use cases for that, which we can go into. One example would be, let's say you bought Bitcoin at $100 and now Bitcoin is $10,000, almost $11,000 today. If you sell your Bitcoin, then you have to pay taxes on the difference between $11,000 and $100, the price that you bought it for. If you get a loan secured by your Bitcoin, you still get cash, but you don't have to pay taxes. And if you use the proceeds of the loan to make another investment, you can deduct the interest that you're paying on that loan from your taxes in the current year. We make those loans on our platform today, and someone who borrows cash secured by their Bitcoin pays an interest rate that's a little bit higher than the 8.6% that we pay to folks who are just holding cash on our platform.
So how much are you making?
How much are we making? We have pretty thin margins right now.
So if I was I have Bitcoin and I want to take out a loan, what's my interest rate on the loan?
It depends on the loan to value ratio that you take the loan out at. So let's say you have $10,000 worth of Bitcoin. If you use that $10,000 worth of Bitcoin to take out a $2,000 loan, your interest rate would be 4.5%. If you use the $10,000 worth of Bitcoin to take out a $3,500 loan, your interest rate would be 7.9%. And if you use the $10,000 of Bitcoin to take out a $5,000 loan, your interest rate would be 9.5%. For a lot of the things that we're doing, we're making cryptocurrency familiar to folks. We operate in the cryptocurrency sector, which today fundamentally is a nascent asset class with some structural inefficiencies still, and a lack of access to scalable traditional pools of capital. So what that translates into is two things. Number one, there are lots of opportunities for trading firms who are doing market neutral arbitrage type strategies to make money. And number two, because there's not a lot of capital available, when you're making loans that are even loans that aren't risky at all, because you're lending someone 50 cents and they're giving you $1 of collateral, you can still earn a pretty high yield. So fundamentally, that's why we're able to offer the high yields that we offer to folks who are holding their assets on our platform. It's still very common today that, the price of Bitcoin will be 20 different things on 20 different platforms. So if you're buying Bitcoin on Coinbase and someone else is buying Bitcoin on a platform in China, they might pay a price that is $100 different. And that's just a market inefficiency that some people take advantage of. So trading firms, big market making proprietary trading firms, you read about them all the time in the equities market now, Citadel and others like them. They make their living providing liquidity into a market. So they'll, sell it where it's $100 more expensive and buy it where it's $100 cheaper. They are having a field day in the cryptocurrency sector. It's like things that used to work in traditional markets in the 80s now work in the cryptocurrency sector. So you asked earlier, Robert, about counterparty risk. The majority of our lending book doesn't have counterparty risk in it. We're lending over collateralized by another asset. We're either lending dollars with Bitcoin as collateral, or we're lending Bitcoin with dollars as collateral. There is a portion of our lending where we do take counterparty risk, and it's to some of the largest market making and proprietary trading firms in the world who have very strong balance sheets and histories of profitable operations. And at BlockFi, we made our first loan in January of 2018. So we've been in the crypto market through multiple days where Bitcoin went up 30% or more in a single 24-hour period, and also multiple days where Bitcoin went down 30% or more in a single 24-hour period. And throughout that entire time, we've never lost a penny across any of the lending that we've done.